What's going on, everyone? We're going to be taking a look at SPX, doing some technical analysis, trying to find some levels in some areas where potentially I can make some money. And if you guys do your own due diligence, you guys can make some money day trading the SPX. Now, first and foremost, I'm not a financial advisor. I'm just a full-time options day trader that does specialize in doing my own technical analysis. So just kind of diving into it, down 15 points, 15 handles, whatever you want to call it, on the SPX today. We had some ups, we had some downs. Not the easiest session to trade, so we did have a little bit of a morning spike in the pre-market and off the bell, followed by a complete reversal on a lot of names. If we kind of just look at what's going on here with the SPX, just going back a little bit here, I'm looking at the daily time frame here. My eyes immediately get drawn to the last time we were rejected at this 200-day moving average here. So this yellow line is a 200 on the daily. So if I look here going all the way back to the 13th of December, this kind of is where my eyes are immediately drawn to on the SPX and where this whole move kind of actually started from. So we made this initial pop higher, looked like we were going to break out here. I'm sure a lot of traders probably got caught in this area before we quickly reversed 1, 2, 3, 4, 5 days in a row where we kind of just dropped, significantly from a close of around 4,019 all the way down to a low price of 37.96, right? So some traders could have got hurt there. If you are a scalper or a day trader, maybe you flipped your bias and made an adjustment and started to go to the downside, right? So this next area here that we were kind of holding on the SPX was that 39.10. So as soon as we really started to crack below it here, you can kind of see my indicator arrow here. All this means is that we got our first close below the 20-day moving average. And that came on the 15th. So if we kind of look at that low there, that price was 38.78. According to my method and my madness and my strategy, all I'm waiting for is a reversal here. So I'm looking for something that is either trading over or under the 20-day moving average. I'm looking for that reversal, and then I'm looking for the following candle to kind of confirm those lows. This is where I want to kind of either start my swing trade if I'm using the daily or the 1 hour chart, or do my scalp if I'm using the 1 hour or the 5-minute chart. So hope that kind of makes sense. If you guys want more information, make sure to become a member of evolutiontraders.com. That's where my eyes go to. So if I kind of look at what's been going on here the last, realistically, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 2 weeks, right? So the last 2 weeks worth of trading, this has gone and done absolutely nothing. It's completely in a level of distribution. It is stuck in between a rock and a hard place here, going up, going down, going up, going down, going up, going down, right? So the market really doesn't know which way it wants to go. Does it want to put in a new low? I don't know. Do we want to try to make a little bit of a bounce here to start the beginning of the year? I do not know. But one thing that I do know is I'm going to be ready for that move in whatever direction that it chooses to give me, because I've already have studied the chart. I've already looked at the price action. I'm already setting alerts. I'm already waiting for those levels to confirm. So if we kind of look at this line in the sand here, now we do have a little bit of a bottom wick here at around 37.65. But if we kind of look at where we have multiple touch points, right, going back to the 19th, the 20th, if we look here at the 23rd, if we also look at the 28th, and then we look at the last 3 days, this line here is sitting at around 3,800, right? So around 3,800, if the SPX starts to confirm today's lows, this is the only thing that I'm looking at. We can look at the previous day or the day before that or the day before that, day before that. This is pretty much an even line here, right? Give or take this day here and give or take this day here. If we start to give up, which 3,800 has acted as a major support. Even today, we got down below 3,800. And I was kind of speaking with someone in Discord today. We were kind of watching that 3,800 short. As soon as it broke the 3,800, it went down about 7 or 8 handles extremely quickly. I'm talking 10, 15 seconds, like very, very fast. So if you were waiting for that move and you are a scalper, you just made 6, 7, 8 points to the downside extremely quick, right? That could have been your one and done trade for the day. So just to kind of get, put things into perspective, what we're kind of looking at now, what I'm looking at is that 3,800 level, right? That 37.93 today's lows. If we start to give this up, which we did close red and we did close below the 5 and the 10-day moving average. If we start building below today's lows, we've got a lot room down. Now, the first stop that I'm looking at here is this 37.64, which is going to give you around 25 points to the downside. And I'm looking at the Bollinger Bands. The Bollinger Bands are starting to contract. Anytime the Bollinger Bands start to contract, that's telling you that a big move is coming. Now, a big move could be coming to the north or to the south. So we just need to be ready on both sides. Realistically for me, okay, even though there's going to be areas of opportunities to kind of scalp these intraday dead cat bounces, I don't really want to look at the longs right now. The charts are a lot more messy to the long side than they are to the short side. Until the bulls can kind of prove themselves that they can take out some of these levels of supply and get back above, like for me personally, okay, 39.39, that's the level I want to see get confirmed before I want to start changing my thesis and changing my bias to go long, or to really look for those long intraday setups. Okay, I'll go ahead and let 80% of these dead cat intraday bounces kind of go, and I'll wait for the rejections, and I'll either take trades at the rejection spots, which is supply, or I'll wait for them to kind of clear out the low of day or previous day's low, and then I want to go short. So if you can kind of look above, right? So today where we got rejected at the 20 SMA. If you kind of look above that, you've got supply here, 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 and here. But if you kind of look at, if we do confirm to the bottom, we've got nothing until the Bollinger Band, okay? So do I want to be on this side of the trade? Now, that doesn't mean that we can't blow through these levels of supply if something changes. But for me personally, just based on the way that I trade, I would rather trade where we have nothing, open air, where I know that a stock or an index or an ETF, can really start to move versus be caught around in a lot of choppiness action. So for SPX, my trade idea is simply taking a short through today's lows and trying to lock it up at this candle 37.81 and trying to lock it up at 37.64, using the Bollinger Band as my absolute profit, like price target that I'm looking to shoot. Now the lower channel here is around 3,700. Someone in the community today posted February 3,700 puts. I think there's $7 million worth of premium. Okay. Someone is not uncertain. Now, could this be a hedge? 100%. Okay, this could be a big institution, a big hedge fund that's looking to hedge the market right now with their portfolios and their positions that they have, or it can be a bet, right? If that's the way we have to look at these big options bets. But there is a hedge fund, maybe two, that came in today with $3,700 puts for February expiration on the 3,700 strikes. Okay, so just kind of keep that in mind. $7 million worth of premium is a lot of premium to kind of lay on just a whim, right? So let's kind of roll with that. Let's kind of, market is showing us, there's a lot of rejection here and a lot of demand here. We've got, something's got to give. It can't just continue to go sideways and stay range bound forever. Once this breaks, that's what we want to do, is we want to be on the right side of the trade. So just keep in mind that today's lows, and keep in mind getting back over that 39.39 area here on the SPX. I hope this trade idea is going to help you with your technical analysis. If you guys want to trade with me, make sure to join the Discord. Also become a lifetime member at evolutiontraders.com. I will see you guys all in the next video.